Good morning and welcome back to another episode of the 5 a.m. Broker, coming live to you from the car at Swansea Channel, ready to go paddling. I had a look at the daylight hours just recently and we're already losing daylight in the morning, even though we haven't seen the summer solstice yet. But what was interesting was that the days continue to get longer up until the summer solstice. Random fact. Interesting to me because it depends on whether or not I'm paddling in the dark. So this morning I thought we could talk about loan repayments, because in some of the previous broker topics, we've spoken about living expenses, and I've also covered off a few videos on interest rates and what's happening there. And now it's very topical, but the loan repayments is a really important part of determining what loan size you want to apply for. So at the moment, if a client has a very strong borrowing capacity and the potential loan repayments are, say, $2,000 a week, that might be well above what their comfort level is for maintaining a home loan. Whether that's for an investment property or an owner-occupied property, it might be well above. So when we do the borrowing capacity assessment, we then also need to look at, okay, what other commitments are they outside the comfort levels? Are they within your current outgoings, like your rent plus your savings, depending on your circumstances? And then making sure that that is something that's going to also align with the purchase price, because if you're only comfortable with $1,000 a week in rent plus savings or loan repayments or whatever the case may be, then that might only be, say, an $800,000 loan. If your deposit allows you to buy a $1 million property, what sort of property can you get for $1 million for, whether it's investment or owner-occupier? So it's a really important thing to have a think about. If you're going to have that conversation with your mortgage broker, then you could do that little bit of homework on our website, affordable.com.au. You can jump onto the loan repayment calculator. It is for principal and interest repayments. At the moment, I would suggest you use an interest rate of around 5%, just to make sure that you're slightly above what the competitive market rates are. Also allowing for a few more RBA increases, but if you wanted to be adding a little bit more of a buffer, maybe try 5.5%. In one of the previous videos I suggested that, and this is me crystal balling stuff, I suggested that 5% might be the new norm. So after we see all these RBA increases and the economy stabilizes, inflation starts to reduce, we might see the rates come back down to around 5%. That's if they go well above. But anyway, that's the crystal ball stuff. This is my training partner arriving. I'm a bit late this morning. Anyway, have a look at what the repayments would look like, because that can give you a much better or clearer indication as to what sort of loan you might be getting, and then can help you with your property searches. If you want to do a little bit of homework before you actually speak to your broker, that's one way to do it. Otherwise, come and have a chat. We'll do the numbers, crunch them, give it back to you, and then talk about strategy. Have a great morning. Speak to you all soon.